So I'll just be providing a brief update on the gaming and the professional services sectors. Over the next couple of weeks, obviously got a few companies coming through. Starting off with the gaming coverage and in particular Jumbo. The company's guided to TTV of $142.2 million, and NPAT of $7.1 million. These numbers were given prior to a final jackpot of over $15 million coming through in the half. So we see that there might be a slight chance of a beat on these numbers. We saw a similar thing in December for the first half, and the company did beat their previous guidance. So there might be a little bit of a prospect of a beat there. Overall, the FY17 period from a lotteries perspective was pretty poor, given lower jackpots compared to the PCP. However, Jumbo's done a fantastic job building out the charity lottery business, and we're forecasting TTV up to be substantially on the prior year, and this is a highly profitable area for the group, and certainly a key driver of earnings from our perspective for the company going forward. While the stock's had a great run, we certainly see further upside from the charity lottery business, and also a normalisation of the traditional lotteries business as well. With the stock trading on about 16 times FY18 PE and 20% plus EPS growth forecast on average over the next 2 years, and also scope for special dividends. We certainly think people haven't missed that stock just yet. Moving on to Star Entertainment Group, the company reports on the 23rd of August. The weak revenue trend that was seen in the first couple of months of the second half is expected to continue, and we currently sit slightly below consensus on the revenue front. VIP revenues are still struggling post the December issues, or late last year, seen with the detention of the Crown employees in China, and we don't expect them to rebound anytime soon. Key focus for management is obviously costs, both in the VIP business and across the broader gaming and hotel operations. And we think that they're doing a great job there, and certainly think that that's an area where they could beat the market. Revenues are expected to ramp up through FY18 and onwards, following the completion of the gaming and the upgrading of the gaming and hotel operations, and also the easing of the associated capital works that have hindered some of the gameplay over the past few months and periods. The company is well positioned in our view over the coming years, particularly as it ramps up construction and ahead of the opening of the Queen's Wharf project in Brisbane, which will be a real game changer for Star, having a top quality integrated resort style offering in Brisbane within close proximity of the Gold Coast, and obviously their recently upgraded Gold Coast as well bodes very well for them. So the stock's trading on about a 9 times FY18 EBITDA multiple, which is below its peers being Crown and Sky City. So we certainly think it looks attractive at current prices, and have a $6.03 target on that stock. Tatts Group, we're not expecting anything material out of this result. As I said with Jumbo, the lotteries period, or the lottery jackpots during the period have been quite poor versus the PCP. And as I'm sure everyone's acutely aware, there's been intense competition from the corporate bookmakers continuing. So we don't see anything shocking the market at the result. The stock, however, does continue to trade at a premium to the value implied under the Tabcorp Tatts merger. Our calculations, including the grossing up of the special dividend, equate to about $3.85. So it's currently trading in the low 390s. So it's still at a bit of a premium to that. We're retaining a hold recommendation on the stock and awaiting the outcome of the ACCC and CrownBet's applications to the full court of the federal court for the appeal against the merger, and that's due on the 28th, 29th of August, the hearing. So we'll certainly be hearing more post that. And moving on to the professional services side of things, IPH reports on the 17th of August. The company's provided EBITDA guidance of $72 to $74 million based on exchange rate of 76.2. So we're sitting at 73.2 million. The company is highly leveraged to the AUD, and we believe that the current strength that we've witnessed is one of the key factors for the recent sell-off in the stock, and believe that this has created a buying opportunity for investors. People do need to note, however, that there is a trading window that will open post a result, so there may be increased selling by the ex-trustees of the business. The stock's in a defensive industry. Is trading on a sub-market PE, has a strong balance sheet with substantial capacity, both from a cash perspective and undrawn debt facility perspective, to make acquisitions. Generates strong cash flow as well, and we believe that people will be well rewarded over the coming years. Suggest having a look at the stock at the moment. We have an ad rating and a $5.51 target on that one. Shine's quite an interesting one. It's been a stock that has rallied a fair bit over the past month or so. I think people are starting to get a bit more comfortable with the outlook for the business, and one of the key focuses for investors at the result will be the cash flow conversion, and obviously the WIP receivables as well. The company reports on the 25th of August and does have guidance in the market for 36 to 40 mil EBITDA. They did suggest that they expect the result to be at the bottom end of that range, and that's currently where we sit. We believe that a solid result here will certainly increase market confidence, and I think a lot of people are starting to look at the stock as it screens particularly well on a PE basis. Further updates on staff movements following the Slater and Gordon issues, and also the changes at the senior management level within the company will be a key focus, as will an update on their engine room IT platform, which is designed to provide greater transparency and I guess greater accountability over the WIP within the business. So we have an ad rating on that and a $1.05 target. And lastly, Xenith IP. The company reports on the 29th of August. There is no guidance in the market for this result. However, we sit in line with consensus, forecast at about a $16 million EBITDA. The company has recently, well, over the past while, undertaken substantial acquisitions, and we're keen to just sit on the sidelines and see how the integration of these goes. Furthermore, the recent transition of the CEO and MD, Stuart Smith, and the timing around this, given the acquisitions, just has us thinking that it might be worthwhile being patient on this name. The stock certainly looks cheap on an 18 PE of 10 times, but given these issues, we're happy just to sit on the sidelines and watch for now. So in summary, the stocks that we're happy to buy pre-result are IPH and Jumbo. We certainly see longer term value in both Shine and Star, and have hold ratings on Tatts and Xenith.